Tony, good to have you with us this morning. Let's start with this new headquarters. I mean, you're also embracing a hybrid work model. So I'm just wondering, from an investment perspective, on what you're spending on the headquarters, is it worth it, given your people aren't going to be coming in every day?
Well, we think it is. Remember, about 90% of our global workforce works on property. And so they don't have the option of necessarily working remotely. And we want to try to harmonize our above property headquarters with our colleagues in the field. As you can see, there's lots of activity behind me. The building's been filling up since we started moving in about a month ago. And the ability to collaborate in person, the ability to immerse new associates into our culture, and the ability to work on special projects in support of the field are really facilitated by this beautiful new building.
Obviously, the business itself also relies on business travelers coming back to a certain extent in key business districts. What are you seeing there in terms of trends? You know, we had the Journal reporting today on various surveys that show we're almost back to 50% of 2020 levels. What are you seeing on the ground, particularly for your in your hotels that do service a lot of business customers?
On a global basis, in the second quarter, every market except Asia Pacific had recovered to pre-pandemic levels of revenue per available room. If you look at July, which is the most recent full month data that we have, global RevPAR was up about 2% versus 19, even with some headwinds in Asia. And in the U.S. and Canada, which is our largest market, we were up about 3%. Leisure demand has led the recovery. Leisure is meaningfully ahead of where we were in 19. As of July, group demand has fully recovered on a global basis. And to your point, business travel is not all the way back to 19, but we've seen steady sequential month-over-month improvement over the first half of this year.
Yeah, well, few expect that it's going to get back to 19 levels, perhaps ever. I'm kind of curious. Do you think so? I mean, when, you know, business people will travel clearly, but not as often as they may have once done because of the opportunity to be able to connect with people virtually. So what are your expectations longer term for what that looks like, Tony?
I don't believe overall lodging demand has been permanently impacted by the pandemic. I do think increasingly it'll be a little difficult to tell you with precision exactly why someone is traveling. And I think that's good for our business. This notion of blended trip purpose seems to be real. It seems to have legs, and we think it'll endure well beyond the end of the pandemic. And so more and more travelers have learned they can conduct business from almost anywhere. And as a result, they're combining business travel with leisure travel. And we're not interrogating them at check-in to say exactly how many days are you on business travel, how many are leisure. So it may be a little tougher to tell you with precision. But as we've seen over the last couple quarters, overall lodging demand is roaring back.
But Tony, are these levels sustainable? I mean, we've been talking about inflation. The travel industry has not been immune to it. And we know that there was pent-up demand. Does it continue like this, or does it begin to slow down at some point?
We have the luxury of marketing and pricing our inventory every day, so we watch demand patterns in real time. And as you rightly point out, there are plenty of headwinds that we're evaluating, whether that be the inflationary environment, increasing interest rates, political instability in Eastern Europe. But so far, we've not seen any measurable impact on our forward bookings. Why? I think a combination of a few trends. Number one, in many markets, certainly here in the U.S., you have strong household balance sheets. The labor market continues to be strong. There was already a move afoot from a psychological basis away from investing in hard goods towards investing in experiences. And then finally, as you point out, I don't think we've gotten to close to the bottom of that pool of pent-up demand that was created by the pandemic. And so we are not naive to the potential impact of the headwinds that you describe. We're just not seeing it yet in the data.
Shepard Smith here. Thanks for watching CNBC on YouTube.